Hello, everyone. This is your market update for Tuesday, May 13th, 2025. We got the CPI data for April, and it came in pretty much in line with expectations at 0.2% on the month and a 2.3% annual run rate, which was slightly lower than the forecasted 2.4%. Core CPI for April came in at 0.2%, which was slightly lower than the forecasted, and the annual run rate remains at 2.8%. Over to the chart here, we have an annual rate of 2.3%, which is the lowest we've seen in about 4 years. So inflation is lower than we've seen in quite a while, and we're going to see if this begins to base. And again, I think it'll probably, at a minimum, stabilize and probably begin to turn higher as we see the effects of tariffs. Over to the charts, gold currently trading at $3,245. Pretty sure this was the cycle peak here in April, but we have not seen a significant decline. Prices correct in usually one of two ways. Either they will have a steep and quick correction, or they have a correction in time. And this one looks like we are setting up for a correction in time where we could probably just chop sideways for a while here. Looks like we have pretty good support at 32, and really we need to see a significant breakdown below 3,200 to get the ball rolling to the downside. And we're not seeing that just yet. And if prices stay above 3,200 for the rest of the week, then my guess is we're probably just going to continue to bounce up and down in kind of a descending triangle pattern until we break below 3,200, which may not occur until either later this month or in early June if prices just continue to go sideways. Silver currently trading at $32.74, kind of the same thing. We're just kind of chopping sideways in a consolidation pattern. Prices really need to get below 31.90 to signal a breakdown, but we haven't seen that just yet. Platinum currently trading at $984. The level here to break is 950. Until we do that, then we're kind of stuck in a range here, I think. I wanted to go to the gold-silver ratio. We came down to test the 98 area. Silver's holding in there quite well as gold corrects, as some of the geopolitical turmoil comes out of markets as tariffs stabilize. So silver's holding in there, and if we see the ratio break down below 98, I think we could come back down to test support near 92. We'll see what happens there. Over to gold miners, GDX got absolutely pummeled yesterday, down 7.44%. Came down, closed below that gap there at $47, tagged the 50-day EMA, held it for now. We'll see what happens here. Ultimately, I think they're going to continue to roll over at some point. But if gold doesn't break below 3,200, we could see them stabilize here in this area for a while. But yesterday's significant bearish day tells me that miners still are underperforming gold to some extent. I haven't seen a bullish divergence there just yet. So I think miners are still going to correct probably rather significantly here over the coming months. And then crude oil currently at $62.80, backed off yesterday a little bit, rising here again. And 65 is the level we're looking at here. If we can get a couple strong closes above 65, I think that could get us to at least test the 200-day moving average and then possibly come back up here to the prior pivot around $72. Looks like we might be putting in a double bottom. And then over to the S&P 500. This is the point in the trend where we're going to see what happens if this rolls over or not. Right now, I mean, we are almost spot on track with the 2022 breakdown, and we're going to see, will prices diverge or will they continue? If they continue, then we'll see them begin to roll over here, probably in mid-May, and start to head lower into June. If they do not and they continue to rise, especially if they get, I guess, decisively above 6,000, then I'd say, okay, I think this correlation has broken and that we have a new paradigm unfolding. We'll have to figure out a new game plan. And then over to the 10-year Treasury. This is where I think most of the pain in the market's probably going to come if Treasury yields continue to rise. Right now, 4.5% is the level I'm looking at. The 10 years currently at 4.44. If we get a significant breakout above 4.5%, I think that's probably going to start to spook the stock market a little bit. And especially if we take out the April high above 4.6%, I think markets will start to back off a little bit after that. So watching the yields closely here, see what happens. We also have potential debt ceiling issues here coming up into mid-year around August. I think we'll probably hit the debt ceiling, so we're going to have some turmoil there as usual. So we'll see what happens, but that's it for now. Have yourself a wonderful day.